Dory, is this the market that not only will demand a rate cut on Wednesday, but will need a rate cut on Wednesday?
Well, you know, that is a real interesting question. I don't think anyone knows the answer to that yet. We're kind of torn between something that looks sort of like a helicopter parent dealing with a spoiled child in the market, or is this something we really need? And because we've had these GDP fluctuations all over the place, it's hard to tell. But one thing's clear is that inflation number and that inflation target is not up. So I think you're going to go ahead and see this quarter point cut, and then we got to decide hey, is this a hedge or an insurance move, or is it something of a trend?
I mean, literally, unless you've just sort of crawling out from a rock, Rip Van Winkle style, you know, the market has talked about a Federal Reserve rate cut for some time here. So if we get one as expected, does the market even move?
You know, that's hard to say. I think it will. I think the market wants to run here. We've got a pretty good economy going. There's a lot of good news going out. Most of the earnings surprises are to the upside and are above average right now. So I think you can see the market move pretty good this week, even with no news coming out of China.
Okay, well, planning for what's expected, Dory, as you know, is easy. Planning for what's not expected is hard. What if we do not get a rate cut?
Well, that would shock everyone, and I think the markets would be disappointed, and you would see the markets react negatively to that. Market had been priced in, as you know, 50 basis points cut, so, or at least getting close to pricing that in. But I think the consensus is more about a quarter of a point right now. We'll see. We'll probably get good numbers all week, which is going to probably beg the question of why are we cutting rates. But I think when you look at these GDP numbers, it makes some sense.
You know, you said you think the market wants to run. What's the most outside, forget about, let's say, let's put the Fed to the side. What's the most bullish thing out there right now that you're seeing, Dory?
Well, the whole market, there's a lot of cash out there and a lot of cash in the world. And we're the sort of the best of the worst markets, if you will, if you're looking at GDP numbers and yields and where everything is right now. So I think you're going to see people just pour into U.S. markets for some time, because I'm not sure there's another place to be. As far as sectors, we're very bullish on banks right now, especially if you're still worried about a recession. It's priced right. A recession's priced in. They're at all-time high capital levels. PE ratios are at 30-40% discounts to what they should be and to the rest of the market. And banks are growing. They're managing their net interest margin. It's a good place to be.
But
right
do
now.
Valuations or any of that stuff even matter? I mean, if an avocado is $2 and people want it, they're going to buy it. If it's $4 and they still really want it, they're still going to buy it. Do people care about the fundamentals right now, or they just have that money, they need somewhere to put it? Bonds are returning nothing effectively on a real basis after inflation, and stocks are the only game in town.
Well, you hit a really good question. Where else are you going to put it?
Well, you answer that. Is there any other place to put it at all?
No, I don't think so. I mean, you're seeing a lot of money going into the privates, you know, private equity and private placements and private money.
World.
And that's its own world. But if you want liquidity in the world, you know, where else are you going to be but the U.S. stock market?